Hey everyone, welcome back to Corporate Decoder, the place where we take a deep dive into the world of corporate finance and business strategy and let you in on some juicy secrets or sometimes just the plain old mundane details you actually need to know. Today we are looking at Reviva Pharmaceuticals Holdings Incorporated and their latest proxy statement. And let me tell you, there are some moves they are trying to make that could really shake things up for shareholders. So what exactly are they planning? Well, it all boils down to a few key proposals at their upcoming annual meeting. The company wants to elect 5 new directors, which is pretty standard, but then things get a lot more interesting. They are asking shareholders to approve ratifying their auditor, Baker Tilly US LLP, for the year ending the 31st of December 2025. That sounds like a formality, but it is part of the bigger picture. They also want your nod on executive compensation, a so-called say on pay proposal. This is where you get to tell the board if you think the big bosses are being paid too much or just right. It is advisory, meaning your vote doesn't legally bind them, but it sends a strong message, and that message might just influence future pay packages. Now, this is where things get really significant. They are asking to increase the number of authorized shares of common stock they can issue from 315 million to a whopping 515 million. Why would they want to do this? Well, it gives them a lot more flexibility to raise money in the future through stock offerings or to use stock for acquisitions and even employee incentives. But with this comes a very real risk of dilution for existing shareholders, meaning your piece of the company could become smaller. And then there is the big one, Proposal 5. They are asking for approval to do a reverse stock split, consolidating between 2 and 20 existing shares into one new share. This is often done to boost the stock price, potentially to avoid being delisted from stock exchanges. As of the 21st of October 2025, their stock price was just $0.52. Per share, and Nasdaq has rules about minimum bid prices. A reverse split could push that price up, which is good for staying listed, but it also means fewer shares for the same value, which can sometimes be a red flag for investors about past performance. The company explicitly states the rationale for the reverse stock split is to avoid delisting from Nasdaq. They received a notice about not meeting the minimum bid price requirement of $1. Per share, they have a window to fix this, and a reverse split is their chosen method. If they fail to regain compliance, their stock could end up trading on over-the-counter markets, which is generally not good for liquidity or investor interest. They also highlight that new Nasdaq rules mean they might not get another chance to fix a bid price issue if they do a reverse split and then fail again within a year. Let's look at some numbers. As of the 21st of October 2025, before any potential reverse split, they had about 114 million shares of common stock issued and outstanding. They also have over 115 million shares issuable from warrants and over 3 million from options. This is a lot of potential shares if they do increase authorized shares and then a reverse split. The number of authorized but unissued shares could grow substantially. For example, currently they show over 72 million shares authorized but unissued and unreserved. After increasing authorized shares and assuming a 1-to-2 reverse split, this number could significantly increase. Now, about the executive compensation, for 2024, the CEO, Laxminarayan Bhatt, had a total compensation of $607,500. That includes his salary and some bonus. In 2023, his total compensation jumped to over $2.7 million, largely due to stock and option awards. The chief financial officer, Narayan Prabhu, earned $404,950 in 2024 and over $1.2 million in 2023. While the 2024 numbers look more contained, the jump in 2023 compensation to over $2.7 million for the CEO and over $1.2 million for the CFO, driven by option awards, shows how much of their pay is tied to stock performance and grants. Looking deeper at the payer's compensation breakdown, their compensation actually paid gives a better picture than just the summary table. For 2024, Mr. Bhatt's figure is about $346,000, and for 2023, it was around $2.27 million. This adjustment accounts for things like the fair value of equity awarded and how it vests. The significant difference between the summary total and the actually paid amount, especially in 2023, highlights the upfront accounting value of stock options versus what they might eventually earn. Director compensation shows that independent directors receive cash retainers ranging from around $32,500 up to over $70,000 for the chairman of the board. On top of that, they get stock awards and options, like $17,109 worth of options in 2024 for most directors. This incentivizes them to align their interests with shareholders. For auditor fees, the company paid around $822,568 to Moss Adams LLP in 2024 and $327,256 in 2023. Now, here is a twist. Moss Adams merged with Baker Tilly, and that is why Baker Tilly is now proposed as the auditor. This merger is a significant event, creating a larger auditing firm. Looking at who owns the company, it's interesting to see that Highbridge Capital Management LLC holds a significant chunk, about 6.6%. Then you have insiders like Parag Saxena, the chairman of the board, who together with related entities holds about 5.3%. The CEO, Laxmi Narayan Pat, holds around 3.2%. All directors and executive officers combined hold about 8.9%. This shows a decent insider ownership, which can be a good sign, but it is important to see how that aligns with large institutional holders. There is also a mention of related party transactions, specifically concerning the chief executive officer's brother, who holds a stake and is a director in the company's Indian subsidiary Reviva Pharmaceuticals India Private Limited. This is something to keep an eye on for potential conflicts of interest, especially given the regulatory environment in India. The spouse of the CEO, Laxmi Narayan Bhatt, is employed by the company as Vice President for Program and Portfolio Management. Her compensation has been subject to adjustments and equity awards, similar to other executives. Reviva Pharmaceuticals is facing some serious headwinds, most notably the risk of being delisted from Nasdaq. The proposed increase in authorized shares, and particularly the reverse stock split, are clear attempts to address this and provide future flexibility. The reverse split, if implemented, is a double-edged sword. It might save their Nasdaq listing in the short term, but there is no guarantee it will solve underlying business issues or that the stock price will stay above the $1 mark. Plus, new Nasdaq rules make it harder to use this tactic repeatedly. The company's financials show a significant net loss in recent years, which is the fundamental reason for these actions. Executive compensation, while adjusted in 2024, saw a big boost from stock awards in 2023, reflecting a strategy to align pay with stock performance. But the company's overall performance needs to improve for that to be truly sustainable. Insider ownership is present, which is a positive, but it does not negate the financial challenges. The company's direction seems to be focused on survival and regaining market standing rather than aggressive growth at this moment. The success of these proposals, especially the reverse split, will heavily depend on market reaction and the company's ability to generate better financial results moving forward. It will be crucial to watch if the reverse split truly boosts the stock price and if it can avoid future delisting threats without alienating shareholders through excessive dilution. Alright, that is our breakdown of Reviva Pharmaceuticals Holdings Incorporated's latest proxy filing. What is your take on these proposals and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. And hey, if you want to chat about these types of analyses and more, join our Discord community. The link is in the description. Thanks for watching. See you next time.